This is James Berman with the Berman Value Folio, and today we're using Trefis to model Apple again and look at some assumptions. What we're looking at today is how far above the $600 fair value that Trefis estimates can Apple remain and have hold on to that intrinsic value even if they don't innovate and create the next killer app over the next few years. The reality is that as I've written about in the past, Apple has an intrinsic value that is well above $400 even without the iPhone, and we can demonstrate that very quickly if you assume these assumptions are correct, which I believe they are, the initial assumptions. If we take iPhone pricing down, if we take market share down, and I'm taking these all down to levels that would imply that Apple goes the way of BlackBerry in many ways. So these are really onerous assumptions, and take down their profit margin as well. You can see that fair value still holds above $400 a share, and a lot of that has to do with the cash on the books, which comprises so much value, $154 per share of value. So let's look at what kind of results can Apple expect to achieve, and what kind of intrinsic value can it hold on to, assuming that it is not able to innovate. So not necessarily assuming these draconian assumptions for the iPhone, but rather trying to take a look at some more reasonable assumptions of where the iPhone would sit over the next few years without any innovation whatsoever. So if we go back to the Trefis estimate of $628 per share, and if I take the iPhone and I reduce the pricing, not to crush it, but to take it to a level which I think is more sustainable, because I believe Trefis is being a little too optimistic here. The pricing for the iPhone of $576 is unsustainable. Trefis recognizes that and has that going down to $400 roughly. But I believe that, let me reset that and smooth it out, that it's actually going to go down to around the $320 level, which is going to make it more competitive with competitors like Samsung. So if I take that down to $320 or so, you can see that the intrinsic value remains at $580. Well, what does this mean? This means that at $537 market price, Apple still has more value embedded in it and more room likely to run, and is undervalued at this point, even assuming this pricing curve. But it also indicates that when you get above the 580 level, and certainly above the magical $600 level, you have to wonder whether Apple stock is worth owning unless you feel that they will be able to come up with the next killer app. And that's an assumption that history will tell you is a bad one to make. So that's all for now. Thanks for listening.